So we have a bounce back from the Nifty in today's trade, 165 points to close at 16,800. Not bad, we'll take it. It could have been better. The highest point of the day was 16,955, almost teasing that psychological 17k mark, well above 300 points for the day, but did slip from its day's high. So can this be the beginning of the end of this correction, or this is just a halt and we should brace ourselves for further downsides? Let's try and figure this out. Good evening, traders. We are on the 21st of December 2021, 49 minutes past 8 o'clock, and let's quickly first get the scans done with, because I tend to miss it out towards the end of our discussion. So first I will come to this Iris Plus software, open the technical query, which is essentially the scanner, and this is the InstaView scans that we do within the Nifty 200 universe. We have inside bar from SBI card, looks good, looks promising. It's also a bullish Harami pattern. I do notice a drop of range, and I also notice positive divergence. Impressive, looks good. Nokri, very impressive inside bar, in the sense that today's bar is as good as a doji, and it can be a bullish Harami doji kind of a pattern. Divergence can be noticed over here on this chart. In fact, in this kind of a market, it's very obvious that we will find many positive divergences on the daily time frame. So this also looks promising for a short-term bounce back, both these stocks. That's a good start to our scan for the day. Pfizer, strong downtrend, no divergence per se, no immediate divergence per se. Okay, I think we have two better picks in SBI card and Nokri. Crompton is buying time, small bodied candlesticks, a doji and couple of spinning tops, inside bar. Not a Harami pattern for sure over here. We have a positive divergence, so too many positive divergence to believe, but I like the fact that today's high and yesterday's high are very close to each other, 418, 418 and a half. So looks like a prospective counter, and then M&M. Not much to take away from here after today's close. Not a very impressive inside bar that we can expect to move on the upside. So Crompton, SBI card, Nokri, I would say that looks pretty impressive. A lot of bullish and bearish. I think most of them will be bullish Harami pattern after today's trade. It's pretty long list. SBI, we took a look. ACC, I won't be too keen, because the sell-off was backed by very sharp expansion of range, so I would look for better candidates. Tech Mahindra, not enough downtrend. Tata Motors, it's got a gap over here to deal with, so it's got maybe some short-term upsides. Same goes for HDFC Bank. Hind Copper just teased the gap over here. No divergence. I think if we see charts which is a bullish or a bearish Harami pattern, especially a bullish Harami pattern which has a divergence, that would be a much better pick, because so many bullish Harami pattern to choose from, it'll be very difficult that which one should we filter out. We spoke about SBI card, Nokri and Crompton. Those had an inside bar with a divergence. So I'm not going to go with all these bullish Harami patterns. Doesn't make sense. On the contrary, I think it makes sense as I'm clicking through them. I'm just looking at the RSI indicator down there for signs of any short-term positive divergence. If we have that, then it stands out to be a better bullish Harami pattern. As of now, none, apart from the ones that we discussed at the beginning. So SBI card stands out. It's good to have one or two rather than 20 or 25. Delhi, the delivery percentage, we look for volumes of at least a lakh, 70%, and would like to scan this on the Nifty 200 universe. Process this for us, please. And we have Adani Green once more. It's buying time. The stock is fairly outperforming the market and kind of sideways. Bajaj Holding is in a downtrend, 86, 72, 38, 32. So just a little bit of improvement of delivery percentage after this sharp sell-off. Levels of 49, 49, 80 kind of levels coincide with with very close to previous swing lows. This was the congestion before the previous breakout. This congestion aligns itself pretty well with its previous high. So not a bad place for a cash market nibbling a bit of accumulation in Bajaj Holding. GSPL doesn't look like a very good candidate. We have a 79% delivery percentage today. Before that, 30, 34, 69, 40, 22. So strong downtrend for sure. I would say Bajaj Holding stands out better. ICICI GI, okay, and ICICI GI still has some scope, but the trend is fairly fierce on the downside and strong. So I would suggest Bajaj Holding, after we filter it out visually, stands out to be a better pick if we go by delivery percentage. Breakout, not very keen to go for any kind of breakout in this kind of a market, because we are dealing with early days of a short-term bounce back, and the upside breakouts generally work well when we are in a strong, well-defined uptrend. So not a very good idea. Flooded with Oracle long, not a single Oracle short. We have Cipla, which coincides because it's inside bar today, and it went overbought and oversold in the last 2 days. So that doesn't hold true. It doesn't make sense to look at Oracle right now, because today we are flooded with inside bars, and Monday was a big high range bar like an LTTS, if you can see here, like let's say a Tata Chem, if you see here. So almost 99% of the charts will show us an Oracle long, because today is a small bar, small bodied bar or a candle. Yesterday was a large range which was oversold. So it will be flooded, and you can see how long this list is. So it doesn't make sense. In fact, from our scan, I think SBI card stood out really well, and the ones that we discussed in the inside bar, Crompton as well as Naukri. So let's see how these stocks play out in tomorrow's trade. Now let's come to the Nifty. So a short-term bounce back, decent volumes, opened well towards the afternoon, extended itself also well, did manage to sustain, but then there was a bit of slipping from its intraday highs and a bit of volatility towards the end to close the day. This is our 75-minute time frame, which is still in a fairly decent downtrend. As you can see from the moving averages, the slope of the moving averages. So not much coming in from there. If you remember, we drew this red bar, this zone, which should act as an immediate resistance, and very close to that level the index did slip a little bit today. So not much has changed. Very early signs of an attempt to reverse. Not bad. Most of the gains came in from the opening itself, which is a good thing. We are bouncing back from this blue zone, which I named, I think, the zone of hope or something like this in our yesterday's video. But it would be too early, really too early, to say that we have a medium-term low in our hands and the market should be bullish. And so what will I be looking for? When will I be convinced? I will be convinced more from the perspective of the lower time frames, because it's the lower time frames which will reverse first. And so I would wait for the index to take out that 17,100, not just take out, but the nature of the movement, the stocks and sectors which participate in that movement. Once the moving averages starts to roll up, it gives a much more confidence, conviction towards further upsides. Till then, we should not forget that the trend is down across the 75-minute time frame as well as the daily time frame. We should not forget that the markets have sold off quite sharply in the recent past. And so aggressive bullishness is not a very good idea. I think we should, just slow down. FIIs will definitely go out, and have a party, just relax, end of the year. And they'll be probably come back after the first week of Jan, and they'll be more active then. So don't think much happening. Maybe we are heading for a range bound market between 16,500 or 17K. Let's see. I think the next few days will give us more clarity on this. Bank Nifty, pretty looking bullish Harami pattern, isn't it? Beautiful small green bar within the red, but this is not a green bar. This is a hollow candle If I change it to actual candles, I think both of them will be red. Yes. So it's not a bullish Harami pattern by any means. It's just an inside bar. Good to see that support's kicking in. Volumes are all right. 75-minute time frame did slip quite a bit, just like the Nifty. Same story for the Bank Nifty as well. So just let's wait and see how the index play out. Strategically, we should, if you are a long only trader, stay put, show some patience to the market. If you're buying for the very long term, that's all right, not a problem. But short term swing trades, 3-5 days, 6-7 day kind of trade, you need to be really good to time your stock or trade, or else a better option would be just to observe. Clarity and confidence, conviction in terms of the trend is important. And once the 75-minute time frame starts to show that conviction, at least it takes out the first zone of resistances, then at least we can say, all right, now there is chance. Let's not try and capture the bottom. We would do much better if we try and capture the next legs on the upside. So wait and watch. Patience is definitely a virtue, right? So I'll sign off now. Let's see tomorrow, 22nd of December, how the market plays out for us. Till then, take care of yourselves, trade well, trade wise.